Hey everybody, excuse me, whoa. And I'm not going to re-record this. This is one take, uncut, everything. So, hey everybody, this is Crypto Chat Africa. This is a channel about teaching you how to trade. Of course, not financial advice or anything, or not legal or tax advice, but this is for educational purposes, only teaching people how to trade, or at least showing my opinion about what style of trading that I use to be effective in trading. And we do have a Telegram group. We got a Discord as well, but the Discord is paid. The Telegram group is um, quote unquote free. You have to use a referral link, and it's free for now. After a certain amount of time, it will be charged. But for now, we're having a free group just to share that information out with people. So you're probably watching it. Chances are you're watching it from the Telegram group. But if you're not, check the link in the description below, or actually email below on how to get into that Telegram group. I will ask you to sign up for a referral link for Binance, even if you have one. I just require that everybody sign up under a new account and things like that, just because if I'm disseminating information, it does help support this channel and keep it worthwhile for me to do it, just as a mutual thing. But today I'm going to talk about picking out a bullish pattern. And this is a very simple one that we can look, and this is on the shorter time frame. So first, what I do is I do volume trading. Let me pause this for a second. Okay, I had to turn on the volume. And so one of the things that I do is volume trading. I do volume, pattern, velocity, and price. First thing I look at is price. The next thing I look at is the pattern, but the price is built in with time. Right now, this is about at 8.8 cents. Well, if you're in Africa, you may not recognize cents for US dollars and stuff, but that's what it's called, pennies, cents, like dollar to cents, or pennies. But this would be called cents. So not unlike pence in the UK. So yeah, with that being said, is this 8.8 coming up also with the pattern? Is it coming from a downward up, or is it coming from up to down to retest what this level is? That is very important. The timing is important. So it's built in. So technically it's a fifth one where it's time, but price, I already assume that that's time built in. The other thing is, like I said, the pattern. Is this pattern like this? This was consolidation right here. This was a pump. This would be called a bull flag. Then it looked like it was going up, kind of dumped, and then took off. But this was news that was there. But these were buyers that came in. They probably front ran the news or whatnot already. But even from a technical standpoint, this started to break above. It tried to pick a boo above this point. So these are just the patterns that you recognize. I say, from what my experience is, and just from sharing with others, learn two patterns, become excellent, become like breathing with those patterns, and then you can expand the other ones. If it's months and months you're using them, one of my favorite patterns, the head and shoulders. I'm really good at spotting it out, and really good at spotting out fake ones. I've looked at it so much from the 1 minute chart because I normally do scalp trading, but I am going to talk about swing trading and everything here. So this is just the basics on patterns, how to get started, number one, and then the pattern. So here you go. Let's go back to the, this is how you get started. So I look at the daily, number one. Since I trade the 1 minute chart and scalp, what I typically do is I look at the 15 minute, not zoom out a little bit, but you always got to look to your left. You got to see where the price has been, like right here to the left. This was a lot of sell volume action right here. So therefore, the next time we come here, it's likely in this area, likely to be a rejection. Once it breaks up here, because there's nothing next to it, and also it even, you see this? This is what you would see on the hourly. So I do use the hourly too, but it actually matched up to about right here, which was to the left, and it's a lot of price action in this area. Now that tells me once it breaks above this, there's nothing but room. There's nothing there. And this is me zooming out. So if it was reset, this is what we would normally look at. So when this breaks to the upside there. So what I do is I look at the daily first, then I go to the 15-minute, the 5-minute, the 1-minute, and because I have a paid version of TradingView, you have a link below where we both get, I think, a $10 credit or something like that, which is pretty cool if you use that. But yeah, I have a paid version of that, so I can put in customized times, just like I can use a 6-hour, which I do occasionally look at actually, because that did help just move right here. It was this double indecision, and if it was a third one, if this turns into a third one, well, actually, that's a big rejection wick right there if it does dump down. But if this was a third one right here, I would have gone long with a pretty good stop loss. Just typically how those things break out. And that's going to be in the future. You see, this is a double one right here, broke up, double one right here, broke up. But yeah, so I typically daily, 15-minute, 5-minute, 1-minute. Okay. Since this is the 1-minute, if I were a 15-minute trader, what you need to do is you need to look at 2 time frames below, 2 time frames above, which would be the 1 hour and the 4 hour, which right now the 4 hour I think is quote unquote optional. I tell people from what I do, but really I look at the 4 hour quite a lot. I might look at that more than the 1 hour. I look at the 1 hour just to see really quick, okay, does this thing pump up and hour by hour, trading within that hour? But the 4 hour, I'm looking at a longer trend because I do a mix of some intraday trading with scalping or sometimes an extended scalp. But typically scalps, just to let you guys know, are trades that last a very short amount of time. It can be seconds to some minutes. I think maybe even a definition is like under an hour or something like that. It might be just 30 minutes. But from what I've seen, most of the scalpers, unless you're like a 15-minute scalper or something like that, your scalp is going to last. It could be seconds. Here's an example of one that would last seconds. If you were to catch this second one right here, the second candle, you could get in as it starts to pump against you. If you got in somewhere here and you notice it started to go up, you'd make somewhere, pretending this is 100x, right? That means it takes whatever you have and multiplies it by 100. Okay. So if this goes up 1%, for example, that means it's as you went up 100% on your trade. That's what that is. So for what I'm about to say, you would be somewhere up between 100x leverage, of course. It would be somewhere between like 50 and 60% profit, depending on how soon you got in, and you notice that the volume was good, and you notice that it broke up above this. And that is the most important part. Once it breaks up above that, it could have pick-a-booed, but it also was the new leading into a new day. So, or this was impossible. I was here live. It was just literally somebody just bought up or out of rage, bought just to liquidate people. This was a 1-second dump. I got out literally the 2 candles before that. I said, this looks, no, actually up here. Somewhere up here within these candles, said this looks like this could be a head and shoulders. It looked like this could have been one, but this was an uglier one. And I said, this is too early. It just came after that. It's in an uptrend. And so I did recognize this head and shoulders right here. I got out just in time. I should have took out a short. So with that being said, we got scalp trading, intraday trading, which those type of traders usually use the 4-hour chart as their bread and butter. And since that's where I came from, I still lean toward using the 4-hour. That helps me with a lot of these. And that actually kind of helps me keep some of my scalps a little bit longer than I should, to be honest, so that I can really just take advantage of it. And then swing trading. Those trades last anywhere from like 3 days or multiple days really, to up to 6 months. Now, there are different definitions depending on it, because one version of the definition, depending on the trader, these are both big traders, they say up to 1 month. I go by the definition of 6 months because that's still a short-term trade, okay? And that's all I'm going to go over right now, okay? I just threw a lot of concepts to you all that are just straight up beginners, because that's what this is. But you can go back and replay this part right here where I'm breaking down the definition. Remember to go over. Scalp trading is anything from seconds to a few minutes in your trade. You get in and out very quickly. Typically, people use some leverage with that trade. So instead of using a whole $100, you can use $10 on 100x and still get the same profit while only risking that $10. Now it's still it comes out to about the same thing, to be honest, uh, except you just don't have your full amount of money there. Because let's just say that within crypto, sometimes these things pop up so quickly that it does not even allow you to get your stop loss in. Like this popped up, it was an instant. This was an instant dump right here. It would have triggered your stop loss. You would have sold down here, and you really wanted to get that, but maybe it was a stop instead of a stop market, which would be down wherever it gets you. You had a stop limit. You would have got missed, and you might have gotten trapped down here, or it came back and then it got you, whichever one. But the other day, there were so many people liquidated when Bitcoin jumped from 9,700 all the way up to 10.1K. It was just too quickly to trigger some people's stop losses. So that's something to keep in mind. Sometimes leverage saves you if you're using your $10 risk, which I mean, technically I would use $100 and still risk the $10 there. But that's because having more money, you can use larger amounts, just for example. But instead of having to risk your whole $100 because it missed a stop loss or something and it dumped farther where you would actually lose $20 or $30, you just got liquidated for the 10. So that's the other side of the coin too. But with that being said, scalps, seconds to minutes, right? These are a few minutes. Maybe this was an hour. That really, I didn't take this at all, even though I started to notice this trade. I really don't like these type. I saw this halfway, and once it went here, I was like, oh, this is like that little bowl shape right here, where it'll come down. It might cup up. I, I was thinking unlikely, at least right now. I think this should flag around, but I don't like that. So my scalp, I'm trying to get in right before one of these pumps so I can get the hell out. That's what it is. Intraday trading, you use the 4 hour, and like I said, 2 time frames above and below. So you use the 1 hour and 15, and then you use the 6 in the daily. That's what you use. So the 1 minute, since I don't have anything under that, unless I use the seconds chart, which I'm really just not going to do, I would use the 2 minute, the 5 minute, 15, or I would have the 15 as my base, but trade on the 1 minute. That's kind of maybe what I'm doing anyway, subconsciously, because when I zoom out, I'm looking kind of like at the 15-minute chart. So I just wanted to share that all with you. Now, the next thing, how to set things up. Let's set these things up. So I got this color coordinated right here and all of these things. So let's set up and create a new list. Crypto Chat Africa Binance. Okay, that's what we're gonna do. We're gonna set a new list, and I can show you how to set a chart and everything. But we're gonna do this. So just imagine that this is the Binance chart right here, and you can color coordinate. So this is gonna be BTC USDT. And how do you find this in the exchanges? Well, you can change this to crypto only exchanges, whereas it says Forex. It should say crypto. Here it is, cryptocurrency. Or you can just have it as Binance only and click that. I'd rather have all the exchanges because sometimes, like Hit BTC, Bitcoin, I also put this one on there as well because they have a huge history since 2011 for Bitcoin, whereas Binance only had it from 2017, I think only October. So we need to have a huge history to see some trends. But that's what I'm doing in like a longer term trend. But for now, simplicity's sake, we got Bitcoin, we got BCH, which is Bitcoin Cash, and it's USDT because it's tethered. Now, if you did USD, here's an example, BTC USD. Now, you open up Bitstamp, which is the ultimate. Actually, I'm sorry, it's not Hit BTC, it's Bitstamp. So I'm going to put that on there. And I also have it labeled as a Binance thing because I use it with that. But if you do that, this is against the US dollar, but with T, it's against Tether, which is a digital representation supposed to be backed by that. So let's go to LTC, which is Litecoin. And I'm just going to do a couple of these. We got ADA, which is Cardano, which is what this chart is. So I may as well put it there. And then we're going to have VeChain, there, Ethereum, because can't go wrong with Ethereum. XRP, we're going to put like the main ones, and then Ethereum Classic because I put Bitcoin Cash. So we may as well put the equivalent. Well, that's not really equivalent. It was a little bit different. I think Ethereum Classic has more quality behind it than what I've seen from what happened with Bitcoin Cash, and then it forked off to Satoshi's Vision crap. That was kind of weird. But anyway, So what you can do is you can look at the chart easily. Now, I colored this here. Now you have to have a paid version. I colored it not these other colors, but orange because it BTC I think is all or is also their color. But let's just change that to purple. You see that? Now I'm gonna change it back to this. And I changed it. You can do custom only with the paid one because I think they're default set to red. And I got this here. I do have different colors. For example, BTT that trades on BitMax, not BitMax, MAX, not EX, .io. USDT that trades on BitMax, but I have it as a different color. Even though this is a Binance chart, I'm using Binance as the #1 exchange with the most liquidity right now. This is right now because it can change in the future. Poloniex was there. Kraken used to be the #1, and so on and so forth. So we're I have this here as a reference point. Okay, this is for representing a different color for another exchange. We can see that all of these things are trying to break out, and so on and so forth. So this is how to set up your your uh, your watch list and everything. You can also do the crypto screener here, but that's a little bit further in the future. Now, the next thing we are going to do is look at that. So let me pause this video. Okay, so everybody, just right here. So obviously, this helps support the channel. I receive 15% of fees. The fees on Binance are the lowest fees on the market. And in order to have a to help support, now this is just doing that. What you would do is you would type in capital PL5XNY0, not an O, C, and then you would type that as the referral code. Or because like I have the link in the description, but I have found, especially if you use the Brave browser, they have a built-in commission for Brave, and they don't tell people that, and I really don't like it. And people use Brave browser on private mode, but it automatically sends you a referral from them. So I ask that if you do use this, use it non-private mode or have another VPN or something set up so that you can have that set up. This helps support the channel because really I'm making these videos and everything. This is a business aspect and educational purposes, right? But I would not be making videos if I didn't think I should have some kind of compensation for just disseminating non-financial advice, remember, information out there for educational purposes. And so if that does bring value to somebody, I just ask, hey, in return, use that referral code. And I have no problem of using anybody's referral codes in the group. If they have some quality exchange there and they want to share it with me, I'm going to use their thing too. So that's just kind of how it is. But yeah, so this is just to set you guys up with Binance. And then 1 second. Okay, so we have $1,000 in this account right here. You can see that I'm getting ready to trade with 200,000 ADA at 50x leverage. Now, this is actually a large amount of that portfolio, but you can transfer more and deposit more in here. And this is not my portfolio. This is nowhere near it. I would not suggest you use that amount. If you're going to do anything, maybe $35. And really, I would tell people to not risk more than 10. So let's see what 10 is. I think, yeah. So when you're first starting to learn, you're using $10. My suggestion, now, like I said, it's not financial advice. What I would do, doing everything over, is to risk $10. Because what happens if I were to lose this 300, because it's going to be this. This is what it is. The cost is somewhere here. Sometimes these are much different in price. Sometimes this is like $10 more for some reason, but it actually gives you this. I have no clue why. Oh yeah, I'm sorry. Yes, I do. It's something to do with the funding rate. But what happens if I lose even half of this? If I lost $175, so it's $176.04 of this, because that's what half of that is. That's a big chunk. That's 17, almost 18% of my portfolio if this was all of my money. Now, I do trade and transfer over, like the spot wallet right here. This is 200 something dollars here. Let me, well, no, that's none of people's business or whatever. But I have a larger amount that I have set in euros. So that's something that you wouldn't even see here. So if I needed to, I would quickly go to the other side if I wanted to protect this. But obviously, there's a certain amount of risk that I would allow myself to get. Now, if it flash dropped and I knew that it was just going to come back up like where it just did right here, then I would add margin to that trade. So that's how to set things up. Now, I want to show you guys this. I have made a custom one, okay? Now, this right here, the depth, I think is complete trash. So I'm going to X that off. Boom, gone. Because what I don't like is if I'm trying to use a calculator at the same time, I can't really see the order. So I'm going to make this a little bit smaller. These trades right here, they're kind of sort of unnecessary. Just get a few of them. The order book here, let's shorten it up. I think seeing 3 and 3 on each side. Plus, you can also just do this, the sell orders to the buy orders, and kind of look at the order book there. But I think this is actually pretty good. This gives me a lot more space that I can see my orders down here, while at the same time is opening up this calculator. So we got 1,000 total in there. You can do your liquidation price calculations. Let's see if I were to have my entry price, which is approximately, oh, we can see the high right now, 0.8786. Okay, that's the, I guess, that high. Let's say I did use that 200,000. Oops, that's 2 million. 200,000 with the wallet balance of that. My liquidation price would be 8,352. Now, I think that's within the range of this dropping down to. So that actually is too much damn risk. And plus, it's already too much damn risk here. Now, if I did not have a bucket load of money to really know that this $1,000 that's here in this demonstration right here is just nothing, then I would not take out this trade because it's just too risky for that. And if I was learning, I don't care if I was a millionaire. What I see is that I should risk no more than $10. So actually, what I can do is, it's not that I have $10 in the trade, okay? Let's do something a little different. So let's say I had $17. Let's try to make this 20. Yeah, roughly here. So at about 48% loss, whatever I'm at, 48% loss, and I'm using 50x leverage, so that's actually going to come upon me pretty soon. But if I were to lower it, which you can click here, is default set to 20. And you notice that it says max position. So whatever your max amount, sometimes you can make a lot more money with 20x and putting in large amounts of money than if you did 75x, which I can tell you for a fact, it limits you to $144 at least, where it was a little bit lower. So it's probably $143 now that the price is pumped a little bit, because the max price of your trade with leverage, 75 divided by, or 10,000 divided by 75 is your max, or some version of that multiplied by the price. Okay. So I found that 50x, you can put a lot more money in. And sometimes when I'm having smaller trades, I do have that 75x there, just because it'll multiply. And when I've made enough profit off of it, right, then I'll switch it to 50x. I'll up the amount that I have in there. But yeah, so it's default set to 20. Okay. You would come over here, you drag it, you press confirm. Now you can do cross and isolate. Isolated means you have to manually add your leverage to it. It's a plus button that you have to click. I really don't want to lose anything, but I guess I'm gonna, let me transfer over 5 cents. Oh, wait a minute, I can't do that. Let me transfer over $1 because Cardano is worth more than $1. I mean, more than a penny. So let me transfer over $1 just so I can take out an example trade. 1 Cardano. Oh, it's not even gonna cost anything. So I'm gonna open a long position. Oh, before I get to that, you can go to preferences. So order confirmation. I have all of this off because I don't need them to say, hey, are you sure you want to open and close this trade? No, I don't need to. I know what I'm doing, because if I'm very quick when it comes to this, quick. So another one is one-way mode. One-way mode means, and I had this set to this. I swear this was so annoying how I would see it, because there are other sites that allow you to do multiple trades, short and long, which, let's say it went against you and you didn't want to close it. Now, I did mess up a little bit because I was testing this out. I've made some money doing it. It's just been so long since I've actually now done it. I have to get used to doing it again because I know how to do this where I can make money, especially if the market is sideways and choppy. You can take out a trade going short and it goes long, and you can take out that long trade and ride it, make that profit while it's still there. So one way mode, you can't. If you took out a short, for example, short. Oh yeah, by the way, when it says short, right? Short means you are betting that the price goes down. Okay, you are betting that the price goes down. Long means you are betting that the price goes up. And so therefore, if the price goes down when you are in a quote unquote short, that means you make a profit when the price goes down. If you the price goes up in a long, not only does the value of the asset that you hold go up, but you also make money from the fact that it's going up and you were correct. Now, if it goes against you with this one-way trading, okay, if I were in a long, aka the price, I'm betting the price goes up and it went down, it dumped, right? I would lose money. And then I could say, okay, now I would, instead of getting liquidated or something, there are different strategies you can use. You can sell off part of your position, not to use stop loss. Then it comes back up and then you can make up that difference. Those are more complicated things to do. So what I cannot do is if I were to open a short, these buttons wouldn't be here. Let me show you this. This is what it will look like. It's reset. It says sell short, buy long. See, instead of open. And then this does, it says limit and market. You see, it doesn't have that. Let's change this back very quickly. Pay attention to this part. Preferences, position mode. Go to hedge mode. Now it's going to say short and long. It's going to give us see, open and close. So if I want to close my position without pressing market, let's say that I bought. Oh yeah. So the other way, if you had 10 Cardano, right? Now, if it went against you, you could sell one and you're like, yeah, let me go short real quick. It's going to close your position. But because this is hedge mode, I can do this. I can have one Cardano going long, and I can have another one going short. And they have two different liquidation prices. Because this is isolated, now I can manually add. I can say $1 and it'll change liquidation price after adjusting. See, liquidation price is 9 cents. But because I adjusted it with $1, there is no liquidation because it's just that small. Now you see, I can also remove margin when it's in a profit. When you start profiting like this one, let's see what we can do. Can we remove anything? No, not just yet. It hasn't gotten big enough. But yeah, so let's market close this. So I'm going to show you the difference between that and cross. Hold on. Close that. So here's cross. I'm telling you guys, I don't want to use any real money. I'm using pennies. I hate that I'm even losing money now. Here's this. Let's open a short. Watch this. Now, liquidation price $994.62. Basically, there is no liquidation. Like, in order to get liquidated, the market's got to go crazy from 8 cents to 900, almost 1,000. Wow. So what this is doing is this is taking the money that is available in your current wallet, not all of this, so you can transfer stuff in. Remember what I said before? Then I can sell euros, and I can do that. What cross does is it takes all of the money that's in your wallet. Now that could be more dangerous to some people. I have found that cross is actually a lot better with some calculated risk. So like, for example, let's say that I have another $10,000 just sitting on the side, right? And I will transfer that over. I can transfer that. Now, I still wouldn't put all of that here because what happens if it just flashes down so quickly, like what Bitcoin pumped up the other day and then it dumped, like within literally 12 hours later, it dumped a massive amount even further down than where it had pumped from. So it could have eaten up my entire wallet, even with the stop losses. Let's just say that. Well, let's just say I didn't put a stop loss like some of you would do, and how some of my trading actually is. To be honest, very dangerous to not use stop loss. Well, it could have eaten the whole thing. So in order to prevent myself from losing any real money, right, I don't put all of it in. And then I'll transfer it over if I think I want to take out a larger trade or to change those things around. So here I'm going to close this in a second. It actually looks like it wants to dump right now, and it's attempting to dump. But this also can come around and round to a W. So no telling with that. So that's how to set those things up. I just showed you how to do that. Oh, shoot. I should have done something different. So let's say open long. Now, this is open. I could do limit, which means I can select the price and I can type one in and say when it gets to this price, it'll go short with Cardano. You see it right up here. See, once it hits that, I'll automatically do it. So you can have your trades set there automatically. For example, I can set a trade which I already want to go long when Bitcoin touches 9.8K and above, I would go long. So I can set it to a long position and set there and just forget it. I could also have my stop limit, which would be my stop loss, where I could say close. This is where it closes it only. So that means if it hits this first, right, and I don't have anything to close on, it would just have an error. So here's the market close. So I have this, I have one. Let's pretend I have more than one. Matter of fact, let's have two in here and have one more long. So, well, see, there you go. I'm going against the trend, losing money. Um, so with that being said, let's look at it like this. And see, the money down here is going down. See that? It's going down because I'm actually losing. And it's coming here. But if it were going with me, this would actually go up. You can see it in real time. So I can close one Cardano. Notice the size is 2. The leverage is 50. That's my entry price, the market price. I'll get into this in a second. And let me get it right now. So what you get liquidated on is the market price. It says the latest price. So this right here, it says mark for short. This is supposedly the mark price. Okay, what the average of other exchanges or whatever the algorithm is. This is your exchange price. So let's just say right here, it dumped all the way down here, but the market of the other exchanges, which I did notice, only went to here. That means even if you didn't have a stop loss, right, you wouldn't be liquidated if your liquidation was here. Even though this exchange got down this low, it's based on this price. This is what forces you to get liquidated, okay? Just to let you know. And that's where you see these spikes and stuff, and people might have gotten liquidated, slash, they might have just hit their stop losses, and it's a big panic out because liquidity is horrible. So I wanted to cover that once again. Mark price. This is a whole bunch of stuff in this video. So if you need to, come back and watch this all the time. Let me make sure I am recording still. So with that being said, I went over that mark price. No, I went over the mark price. I wonder if I could, no, I was going to take out this 1,000 and just leave in that, but no, there's no point. But with that being said, right. So it's no liquidation on this because we have so much and so little of that money used that there's no liquidation price. It's got to be equivalent, like where if the liquidation price is so low, it's basically non-existent for all intents and purposes, unless there's like a flash crash and stuff. But with that being said, the size is 2 with our leverage on 50x. And notice, if you have enough money, you can actually do this. Boom. You can change the leverage in the middle of it. You can change it in the middle. Whereas here, watch this. If it's on 1x, watch this. It's going to be 8 or 16 cents in there. Yeah, see, 17 cents is what I've used because what it's doing is it's automatically adjusting for what the equivalent is. It would normally be 17 cents, but because I'm using 50x leverage, it's using 50 times lower than that. Okay, 50 times lower, which is 0.0351. So 0.3 of a penny, of a cent is what they're using. So I'm going to close one. I'm going to close long right now. You're going to see this right here. It's 2. Now it's went down to 1. See that? Now I did that market. Now I'm going to close another long. Watch this. It's going to close my position completely. You can go to your trade history to show that. And I guess that's all I want to show now. I'm going to transfer this back over. So they can be with their happy friends, and I have 10,000 even. I mean, 1,000 even. I like to reset this thing to numbers. So if I made another larger profit, I made just under 500 on the last trade in profit. So because it was just under 500, I took it all off. Now, if this goes 500 and above on the next trade that I do, then what I'll do is this will be 1500, and then another 500, it'll be 2000. And after that, it'll be whatever, and so on and so forth. And then let's say I get to 10,000. Um, it just really depends. It depends on what I'm doing on the day. On the weekend, I usually use a lot less money because these things are so volatile. I just don't trust it. I really don't. Um, and then on the weekday, I use more money because it doesn't whip around as much, and I just don't want to overly risk and lose too much money. That's just my style, and that's what I'm doing. I noticed that in the crypto market, these prices just go around. There's so many bots that are in this, and it was so much bot action earlier that I just on the weekends I use less money at risk. Okay, so on the weekday, this actually could be $10,000 in this wallet, 20, whatever the like. But with that being said, I think I've covered everything just as a beginner aspect. Now this is Binance Futures. Okay, Binance Futures. Now you can get to Binance Futures from here. Hold on just a second. So yeah, so you can get to Binance Futures from here. Now that's derivatives. You can click futures, and they're going to give you a disclaimer. Enjoy increased leverage without risk of liquidation. Huh? Leverage tokens. I've never seen that. Oh, that must be that BTC up, BTC down. Yep, that's what I thought. So I'm guessing you don't have to long Bitcoin with up to 3x leverage. Oh, this is interesting. I'm learning something. Right here it says without that real leverage is 1.982x, and this one is 2x to the short time. Oh, okay. So what this is just that it's the same thing. Like they said, it's up to 3x leverage, and you can like short it or long it. And all you would do is actually just lose money on it instead of getting forced to liquidation. Liquidation, the exchange charges you more money. That's what happens when you get liquidated. So, for example, they normally have Binance has a 0.04 depending on your trading volume. You go to the fees area, which is all the way on the bottom. You look at those fees, you multiply that by your leverage. So when you go to Binance Futures, if the fee is 0.04%, you will go in the calculator. And here we go. This is what we're doing. Oh, wait a minute. Those aren't that was something else I was doing. So you would go to 0.04 times 2 because you have to buy it and you sell it, times your leverage. In this case, I was using 50x, so it will be 4%. That's what I would need to have to break even, and this is what we can do. Okay, so you get to Binance Futures by going to derivatives, hovering over that. But some of you are using the app. I'm telling you, the computer is much better. But I know certain places in Africa it's not convenient to have a laptop or a desktop computer. So you can still do all of this except for that hedge mode thing. I think you can open up your browser on your mobile phone, set it to act as desktop. Okay, set it to desktop mode, and then you can go there. But here's the futures. You click that. I've already got it open up on another page. I don't want it to give me the indicator stuff. So what I'm going to do is I'm coming back over here. Oh yeah. So the fees that you have to beat. Here you go. So you can do the target price. Here's this. You can do 0.08768, right? Since it's 4%, let's see what price it would be approximately just to break even. So it'll be approximately 6/100ths of a penny. No, I'm sorry. What the heck? My math is wrong. 7/100ths of a penny up because the difference between 68, 75, 7, and this is 1 cent. The 1 cent place. This is the tens, the hundreds, the thousands. But we're not going to say that. So for simplicity's sake, I just say 7 more. So every 7 more should be, that means 7 more than that. That should be 82. Yeah. So that's 8%. So I actually make 4% profit. What I like to do is I like to look at different scenarios of what's more realistic. Is it going to get here? That's probably harder to get to 100% profit. But let's look at 50% profit. That's within the range because it's only slightly higher of the 24-hour high, and that's likely to hit again anytime soon? Question mark. So we can just play around and look at different things where you're set. So you can do your risk reward. If you are going to say, I'm going for 25% profit, remember, you risk reward ratio, that's going to be another video, but very quickly, if you're risking $10, what you're trying to do is make 20 in that trade. That means you're not putting $10 in the trade. Remember earlier how I gave the example of $21? And then if you lost a certain amount, if you lose 10, you're out of the trade. When I say risk $10, that just means when at the point where you are now down $10, you are out. That's your stop loss. No exceptions. Now, some people want to risk 30. Okay, that's what you want to do. Cool. Um, some people have more money than others. But as a beginning trader, uh, in my opinion, what I would do, not financial advice. I know I say you should or whatever, but what I would do and what I found to be most effective is once I know how to increase $10, then with my skill set, I can then use $50 risk, which means I'm going for $100 profit. So if I were to put a $10 risk, I could have $100 in there. That means all I need is a 20% profit, and then I am up $20. That's what that means. So risk doesn't mean your trade size. Trade size and risk are different. Now, if you want to risk your trade size, you need to get 100% profit, which means that also you would get liquidated. And getting back to liquidation, they normally charge you that 4% fee. But what that does is, I think that 4% becomes a 25% fee once you get to calculate your liquidation price. So it's not even. They want to make their money, and it is more expensive because they will automatically in their system force you to trade or close the trade, which can lose them some money. So they're going to charge you extra money to forcibly close your trade. But this is what we were looking at, the target prices of what we're going. Same thing as if we were to go short here. That's what we will look at. And then this can show you if you went long 0.0876 and it went to 0.1, and let's just say you had 2,000 Cardano. That means you put $3 there, you come out with $24.80 USDT. Now if you were going short, you would lose that. You would lose 700+%. So that's just showing you what you will be looking at. Very useful calculator. Okay. And so when you are analyzing these charts and everything, that is what we're looking at. And I guess I never did go over the beginning of that. So now let me come back to where I started in the beginning. And this is going to be a separate video now that I think about it, where this is what I put here. Go on the 15-minute chart. Now, I never drew this green line. I just left it there because I said, and people that know, they know they were in the group. And on the next video, I'll bring up the Telegram and show you snippets from the Telegram. But because I would need to block out some names and stuff from the Telegram and the Discord, I'm not going to actively show it. I got to screenshot those and block out the names. So I'm not drawing this for, that's exactly what it was supposed to do. I'm saying to the people, since this was a bull flag right in here, what they normally do is this, and then it goes up. So what is it done? It's crunched here, and it's tried to go up right here. So there was also a mini version of it right here on a smaller time frame. I did this on a 1 minute chart. The 1 minute, 5 minute actually handled that. I drew this on the 1 hour chart, and obviously you can see that the 15 minutes still falls within the realm of that. So once you learn different patterns and wedges, I do not, okay, I'm just going to let you guys know. More recently, I've had screenshots and videos that have indicators because I am now trying to try out things so that I can help other people learn them. Typically, my trading is naked. I do not do this. I don't do that. I visually do this. I can do calculus in my head, so maybe I have the ability to not have to do that. So I just want to put that disclaimer. I don't normally draw these out, but I am doing this for demonstrational purposes and also to show other people that it is possible that you can catch these by looking at these patterns. And if this handicap helps you to draw that, I guess what I would do if it helps me, I would draw it. So, but me personally, I really don't use them or use any indicators other than the volume indicator because it's technically one. But there are some moving averages that can help. And with that being said, I've kind of gone on long. What this is, let me do this demonstration here. So this is essentially pumped up here because this was on the hourly. It flags around. It's a, oh, delete that. It flags around, and then what those things do is they pump. Or the flag could have gone here, then this, and then that. That's the only two versions of a real bull flag. Sometimes, occasionally, you'll see this in the Bitcoin, especially Bitcoin market, and then it goes up. That is a very highly unlikely scenario. But what happens most of the time is that that will go down, and then it'll continue to go down. Okay. So I just want to give you all the 2 cents on that. Yeah, and I'll catch you all on the flip side. Please like, subscribe. If you are interested in the free Telegram channel, check the link in the description below. Otherwise, look, you can pay less than the equivalent of $2 a day, or you can pay the equivalent of $2 a day. If you join, you get a 10% discount if you pay for 6 months in advance. If you pay for 1 year, you get a 20% discount on that monthly fee. And the monthly fee, like I said, is about $2 per day or less than $2 a day when you really think about it, which is equivalent of $60 US dollars. You can pay with auto pay features, which we can set that up if possible, but we can also do crypto. So if you want the paid group, which is a lot more organized than Telegram. Telegram is a little bit harder to organize these videos. So I got to post them up and then probably have a continuous list of these videos here. But if you want that, if you want help, it's called an Academy and Links. Academy and Links. You have a cheat sheet and all of those things. It's in the Telegram. I mean, it's in the Discord. So Telegram group is new. And so we're going to keep on growing, and we can't do it without you. So like, subscribe, comment below. If you like this, if you want to see more videos like this, please, please, please do. Even if you don't join and you just like the content that I'm sharing here. Let's just say you don't join either one, the Telegram or that, which I would say, hey, if you reside in Africa or African descendant or anything like that, join the Crypto Chat Africa Telegram group. I mean, why not? But because that can help you. But if you are, I guess I lost my thought. But oh yeah, if you are liking the channel and want to support it, come on and use the affiliate links or the affiliate code, because that does help support, and it does mean a lot to me. It doesn't cost you anything. You get an actual, if you saw that screen, you get 5% cash back. I could have said it to you getting 0, but instead I said it to you getting 5% of your money back on your trades, so that you're at least getting an incentive to want to do it, because other than Binance, a company you don't know that's not necessarily having I guess the videos like I am, like I said, not financial advice, they're going to take their money anyway. So the more spreading around the wealth and stuff like that. So that being said, catch you all on the flip side.